Hi guys, and welcome back to the channel. Today we are going to take a look at VALE, an iron mining company based in Brazil, but they of course have mines all over the world. Today we're going to be reading about the company, learning about their financial position, their future growth, and looking at their whole business, analyzing it. And last but not least, finding out if this business is trading at fair value and if we want to invest in it or not. The past couple of years have been crazy for the stock market, but that is also true for the commodity iron. So if we look at the price of iron here, you can see over the past 10 years, if we look at this graph, this is when COVID hit and it has just spiked up in price, a recent dip, and has just continued up a little bit. But if we take a look at VALE, we can see also, if I go here to the 20-year chart, you can see that the charts are much alike, and that is because VALE's main business is this iron mining and selling the iron ore. So if the iron price goes up, then VALE's profit margins increase, and then they just make a lot more profit. If you take a look at this graph right here, and then you take a look at this graph right here, you can see that they really look much alike. So we had this huge crash here in 2008, and we are now here, right? So if we zoom into like the 5-year chart, we can see that we've had a huge boom in demand for iron, as you can see here. So first of all, it's very important to understand it's hard to analyze a company like VALE, because one thing is the company, but that is only kind of a little part of it. The biggest part is actually the commodity, because you can't really, although you have a great business that like they make money, they have great management, they are not going broke, all these things. But if the commodity suddenly drops, right, for a long period of time, because it will go up or down, it will fluctuate, but if it just stays down, well, then you have an issue, right? So that is why it is very important to look at the long term when you're looking at companies like VALE and commodity stocks. Like maybe you could look at gold, other gold stocks like Barrick Gold, Newmont Gold Corporation, and VALE stock, right? Yeah, so it's very important to understand that you're not in this for the short term, because next year the iron price could drop, and then VALE is going to drop as well. And you can also see in the revenue numbers of the company, they have been fluctuating up and down a whole lot because of this price. So that is the whole thing that you're buying into with these commodity stocks. First of all, I want to take a look at a little bit of background on VALE. VALE is a Brazilian multinational corporation engaged in metals and mining, and one of the largest logistics operators in Brazil. It's the largest producer of iron ore and nickel in the world. VALE also produces manganese, all these other, like copper is the only one I really know, and cobalt. Currently operating 9 hydroelectricity plants and a large network of railroads, ships, and ports used to transport its products. The company has had two catastrophic trailing dam failures, where this like hazardous waste, when you take the ore out of the stone, there's like chemicals involved with this whole process, and yeah, you can kind of probably figure out what this is about. So they had 2 failures, catastrophic failures, that led them to lose the license in that area, and their stock dropped 25% in value. VALE is considered the most valuable company in Latin America, with an estimate market value of $111 billion as of 2021. And you can see here we're laying at almost 100 billion as of the market cap of this company. So it is a huge company, what we would call a large cap. That was a little bit of background on the company. Let's now take a look at some key things before we get into all the fun analyzing, all this fun stuff. We have to take a look at some key things that are very important when we are looking at companies. And if a few of these are not checked, then skip the stock, because you don't want to just throw your money in random investments, because there will always be great investments out there, right? It's just about finding them. So as Charlie Munger says, don't just buy some random things, hold on to your cash. I don't know, that's probably an exact quote here, but he holds on to his cash, and then when he sees a really great investment, then he kicks in. So if there's too many red flags when we're looking at a company, then we're on to the next one. It's not about every company that you look at being a good investment. That is not the goal. So first of all, what we want to look at is, the first thing we want to look at is, are the outstanding shares staying the same or decreasing, the number of outstanding shares? So that means that, are the owners of the stock diluting us, which means that they are inflating the stock price? If that is the case, then your share as an individual gets worth less and less through the years, and that is not what you want to happen. You want the number of outstanding shares staying the same or decreasing. And as you can see right here, well, shares issued, you can see it has been going down since here we have data from 2018. You can see it has been steadily, it's up here, steadily declining from what is that, 5.28 million to 5.13 million. So we are declining in the number of shares here. So for shares issued, that is a check mark there. So it's safe to say that VALE has had a great last year. So if you look right here at the cash flow, we want to see that, of course, increasing. So if we look at 2018, this is not data from as long ago as I want, so I couldn't find their annual report. It's like hidden somewhere. I could only find it in like, what is that, Brazilian language. I couldn't find it, so we only have data from 2018. And if you want to go deeper with this stock, then you probably would want to look even further back in history, because again, the stock price fluctuates and the cash flow will fluctuate depending on the price of the commodity. So we want to see this going up, and we can see it is. But again, this has been a great year for VALE because of the price of the commodity, and that is why we can see this huge bump in the free cash flow. Also, we want to look at the income statement here. The total revenue has been increasing, 36.5 million to 54.5 million. So that is increasing as well, and that is pretty much all that I wanted to look at right here. Now we can continue here onto Simply Wall Street. Simply Wall Street helps us analyze companies. Simply Wall Street just puts together all of this information, pulls it out of different platforms, and gives us a nice overview over all of this. And they of course used their magic formulas and analysts' opinions in here. Also, something I just want to check out is the earnings right here. You can see for the quarters, you know, they beat in Q1 of 2021. They missed a tiny bit in Q2 2021, and they missed again in Q3 2021, and they beat their last earnings that they reported here for Q4 of 2021. Now we're waiting for Q1 2022. They haven't come out with that yet. So yeah, Simply Wall Street just helps us get an overview, and this is analysts. You can see here companies' financials. They have 18 plus analysts on here. So yeah, first of all, we want to take a look at this. VALE, together with its subsidiaries, produces and sells iron ore and iron ore pellets for use as raw materials in steel making in Brazil and internationally. So PE ratio is below the BR market, and that is the price to earnings ratio. Earnings have grown significantly the past year, and you can see here with the Snowflake analysts say solid track record with excellent balance sheet and pays a dividend. And you can see here earnings are forecasted. This is risk analysis. This is risk analysis. So they have a couple risk checks right here. The earnings are forecasted to decline for the next 3 years, and they have an unstable dividends, track record. So let's go down here to the valuation. So it looks like the company right now is overvalued with 64%. A lot of people search to these commodity stocks in times like these, where there's war and where there's all these things going on. So the stock is overvalued as of right now. The future growth is forecasted to decline, but don't let this shake you too bad, because we have had some crazy growth. You saw here, what was it? How much was it? We can see, yeah, it grew by 44%, their earnings this past year, and it is forecasted to decline a whole bunch. So of course they can't expect the price of the commodity to be this high for the coming years. So that is why they are calculating that in there. But if the commodity price stays at that, then of course this is going to be a whole nother story, but you can't make those kinds of assumptions about the future. So I want to take a look at this right here, VALE's fundamentals summary. You can see here they have a PE ratio of 3.6, which doesn't seem like a lot, and their price to sales of 1.6, sorry. And you can see this is their market cap, and the revenue is going around, this is for this is for one fiscal year, and you know, this looks pretty healthy, especially when we compare that to the average of the market that they're in. The gross margin here is pretty high with 60, and the net profit margin is 45. Something that I want. So the next thing we're going to look at is the historical annual earnings growth. So this company has been performing well with its earnings growth, and you can see right here that they have high quality earnings and they are growing their profit margin. So the commodity price goes up, but their expenses doesn't go up. So that is all just pure profit margin, the amount that the commodity surges to. So you can see something that it seems like VALE is pretty good at is using their equity and their assets. As you can see right here, return on equity is higher than the industry, and return on assets is also high, and the return on capital employed, which is when you invest in the company, you want that money to make a difference. You want that money to be employed and to contribute to the growth of the company, and it does. You can see here with the 40% return on invested capital on capital employed. Financial health. So this doesn't look too good actually, but they have a lot of long-term liabilities, and that is where the problem lies, because they have a lot of cash flow and they have a fair amount of cash on their hands right now, but not enough to cover their long-term liabilities. Their short-term assets exceed their short-term liabilities, which means that they could pay off their short-term liabilities like that, but they could not pay off their long-term liabilities with their short-term assets, and that is a problem. So that means they couldn't just go like this, we want to pay down all that debt, here you go, and then that was gone. You can't, VALE isn't able to do that. Debt to equity history and analysis. You can see the red is the debt and the blue is the equity, and you can see here that the debt level, the debt to equity ratio is considered satisfactory. They are reducing their debt. Their debt is well covered by operating cash flow, and their VALE's interest payments on its debt are well covered by EBIT. So yes, moving on to the dividends. Here is where VALE kind of shines bright. Like you can see, they have a 10.5% dividends, and this is of course because they have had a brilliant year this past year, and they have even paid a higher dividends. And they have even actually paid a higher dividends. You can see they paid a 13% dividends here in 2021, and that is forecasted to decline. Obviously, their earnings are forecasted to decline, and that means their free cash flow is going to decline, and all these things, which means that, well, they can't pay out that much. Right now, their payout ratio, which means how much of their earnings does they pay out to the shareholder via the dividends. Right now it's 55%, which is high, but still they say, Simply Wall Street says that it is well covered by their earnings, but normally you say from 30% to 50% is considered satisfactory, and you haven't really got any data here on the future payout to shareholders because it's very uncertain, because it all depends on the commodity underneath. If it has a good year, then you will likely see a huge dividends from this company, and likely also some share buybacks, as we have also seen. So the management team has almost 3 years of average tenure, and yeah, and it's all looking good here. Ownership breakdown, most of it is owned by institutions, 80%, and yes, and you can see here the top shareholders. This capital research and management company owns 30% of this humongous business. Yeah, so that was pretty much all of that. That was whale stock for you guys, and well, I hope you learned something about this company, and go out there and make your own research to make your own opinion about the stock. I'm just giving you some information here that hopefully can get you started on your research. And to me, VALE is not looking as a super great investment for me. That is because of the short-term assets not covering their long-term liabilities. That is because that their earnings are forecasted to decline because of the underlying commodity. But all in all, I think the iron industry is going to be, well, growing, because we have not stopped using iron. Houses and apartment buildings and all these things, and everything just requires iron these days. So I definitely think that the iron industry is going to continue growing, and unlike something like gold, it's not gold doesn't have like the same kind of usability in the real world as iron has. So that's iron and copper, right? So that is why I like iron and copper. Yeah, but as Charlie Munger says, you only want to buy really, really good companies, and otherwise just wait, because you will get some good opportunities. So that's kind of where I'm laying with the stock, but it is completely up to you what you do in regards to VALE. And with that said, have a great rest of your day. Bye bye.